Former FDIC Chair Sheila Bair calling for a crackdown on payment for order flow in an op-ed published today in the Financial Times. Bair saying the practice lacks transparency and hurts public markets. Sheila Bair is with us live tonight. We're also going to hear from Virtu CEO Doug Sifu. He's taking the other side of this debate. His company is one of the wholesalers that pays for order flow, says an SEC crackdown would be absurd. He will make his case straight ahead. But we first want to start off by talking about the op-ed that is getting a lot of buzz today. Sheila, welcome back to Fast Money. It's great to have you with us. How does it hurt the public markets?
Well, it impedes competition. So you don't have to publish the best price to draw an order. You just pay some broker to send the order your way, and then you decide whether you want to take it or not. If you take it, you've got to provide a little bitty bit of incremental price improvement on whatever the national best bid ask is, or you can just send it to an exchange. It's your option. But that, it impedes competition. You don't have to compete based on getting the order based on your quote. You're going to hide your trading interests, and that's exactly what's going on. There are two trading interests. Some of that's being reflected in payments to brokers as opposed to giving narrower spreads to retail traders. I know that's hard for them to understand. They like the commission-free trading, but really, believe me, they're still paying for it, just with poor quality executions.
So you're saying that it's not transparent in that retail traders, when you're getting a free trade, you're actually paying for it by not getting the best price?
You're not getting the best price. Yeah. Exactly right. They are hiding their trading interests. They don't have to display it. They don't have to publish it to you because they can pay for your order. They don't have to attract your order by offering the best price. So they're giving you an inferior execution, taking some of the money they would have been willing to pay and giving it to your broker. That's really what's going on.
If a retail investor doesn't like this payment for order flow, Sheila, they could go to a broker where they have the option to turn that off. And so why is this an issue? I mean, it's up to the consumer, right, to do his or her homework and decide what, if they want to pay for it, in whether it be a trading commission or pay for it in terms of maybe not as good of a price.
Well, that's true. There are some brokers like Fidelity that do not pay for order flow, and they also don't charge commission. So that may be the best of both worlds. Sure, you can make that choice, but look, this is an inherent conflict of interest. I mean, should our regulations permit this kind of conduct? The current situation hurts the quality and the depth of the markets because, again, it doesn't require market makers to compete based on price. If they had to compete on price, you would see more liquid markets and narrower spreads. So there is a larger public policy issue in terms of the impact on market structure, but also it's just an apparent conflict of interest. But usually those things are frowned upon or if not, at least made illegal by regulators.
A while back, the CEO of Robinhood, Vlad Tenev, Sheila, has suggested that perhaps lit exchange or public exchanges should be able to price in fractions of pennies, and that could actually increase the competition between them and wholesalers. Do you think that could be a solution, or does the whole system sort of need to be revamped?
Yeah, so that kind of doubles down the other way. So basically say, okay, the exchange market makers can also just step in front of a published quote with very minimal price improvement. I think that would really hurt the depth and transparency of the markets. Then it'd be an insider's game for everybody. No, I think we should go the opposite way. Maybe have a minimum check for off-exchange, minimum requirement for price improvement for off-exchange market makers. That would be a half ground. Even better disclosure about what they're paying to their brokers would be improved from what we've got now. Another thing that I would hope retail traders would think about is when these wholesalers pay for your order, they are not just paying to get a little, extra spread from you because they're not giving you the best bid ask. They're not giving you what they're truly willing to pay, but also they're getting your information. And these retail orders are now moving stock prices. It didn't used to be the case. It used to be the institutional business, which had the information advantage. But now, as you've seen with GameStop and these other meme stocks, these retail orders will move markets. And so, having that inside look, that first look by paying for that order flow is also benefiting these big institutions. That's in your information. Your broker is selling it to a big market maker, and they're benefiting from it.
Some would say, Sheila, that the retail investor hasn't had it this good in a long time.
Yeah,
Are they actually being? I mean, do you think that they're actually being cheated by payment for order flow? And we're talking about fractions of pennies here.
Yeah, well, if you do a lot of trading, that pretty soon it's real money. Well, nobody wants to go back to $25 commissions. No, the fact that we have very low commissions, and I think some, there are some brokers who are not doing payment for order flow and also not charging commissions. You can still make money off of trading. Offer the best bid and price. Be smarter than everybody else in terms of trading stocks. You can make money that way, but it's a conflict. And they are, it's just, they're not getting reduced costs. They're getting less transparent cost. So yes, has it improved? Yes, technology has enabled a lot of that. But we don't need payment for order flow to drive down cost. I mean, technology really has been the lion's share of that. And we'll continue to have that benefit, even if they do away with payment for order flow at the SEC.
If you had it your way, Sheila, would this be banned? Would payment for order flow be eliminated from the system entirely?
Yeah, I think in an ideal world, market makers would draw orders based on publishing the best price, publishing the best bid ask. And yes, I think that would be the ideal world. This has been going on since the 1980s. Bernie Madoff pioneered it back when I was working for the New York Stock Exchange. So this has been around for a long time. It's been a big factor in the fragmentation and less transparency in our markets. I think those are harmful. Do I think we'll actually get a ban? Probably not. But I think it's good to show a spotlight on it, educate retail traders about what's going on. And perhaps there are some middle ground in terms of reforms that the SEC could institute that would at least improve this situation. I think we're the only ones that allow this. They don't allow it in the UK. They took a look at it a long time ago and said, ooh, we don't want that. They were right. It is an inherent conflict, but the genie's out of the bottle. So I'm hoping that they can at least curb it, if not ban it.
Sheila, I have the utmost respect for you, know that, and thanks for coming on the show. We're going to hear from Doug in a second, and this is a complete, non sequitur to a certain extent, but here we are talking about, in my opinion, Mel said it, playing field that's never been more level, and I understand, you can get exercised about this, but last night we broke in with a story about Robert Kaplan trading stocks, and, everything he did was above board, and I'm not suggesting any impropriety. Then you have congressmen and women allowed to trade stocks. To me, you talk about an unlevel playing field. That's where it lies. So, we can talk about tenths of a penny all night long, but, this to me is why people get so exercised and why the, playing field that's supposed to be level is anything but.
Yeah. Well, there is, I'm not going to defend all these other abuses that are going on. This is one of many issues that plague securities trading these days. And yeah, there are a lot of conflicts everywhere. I don't, 2 wrongs or 3 wrongs or 10 wrongs don't make it right. I'm focused on payment for order flow now. I think that is an inherent conflict. I think brokers should worry about getting the best price for their customers, and I don't think they should worry about trying to get the best deal for themselves. And I do think, again, there are some brokers that do it already, no commissions, and they don't pay for order flow. So that would be the ideal. And if some brokers can do it, you got to ask, well, why can't all brokers do it? You got to, hold your nose and look at that enforcement case against Robinhood. There was an explicit trade-off. They were taking worse executions for their customers to get more in payment for order flow. This is coming out of the pockets of retail traders based on poor quality executions. It's less transparent. It's harder to explain. I get the realities of that. That's why I don't think we'll ever get the message through in a way where it will be broadly accepted to stop this practice. But I do think it is possible to have either zero or very low commissions without payment for order flow. And I would love for things to move in that direction.
Sheila, before we let you go, I want to ask you about some books that you have coming out next week.
Yeah.
This is very exciting.
Yes. Right. Well, thank you for asking. Yes, I wrote a series for children called Money Tales for Albert Whitman. We have 2 more. There are 2 out already. There's 6 altogether, 2 coming out September 15th. One, Billy the Borrowing Blue-Footed Boobies, about unaffordable borrowing and why the problems with compounding interest when you don't pay off your debt. The other is Princess Persephone Loses the Castle. It's about mortgage lending and being careful and not getting a mortgage you can't afford. So, yeah, I've had a lot of fun. They're fun. They're entertaining. The kids will like them. They'll giggle. I think the parents will enjoy reading them with their kids. So, yes, feel very strongly about this, and thank you for asking me about it.